Hey everyone, welcome to the KE Report and a daily editorial on Monday, June 9th, chatting with TG Watkins, Director of Stocks over at Simpler Trading, also the editor of the Profit Pilot website. I always like bringing TG on. We chat with him every about 3 weeks, and he just provides us with more a technical outlook on markets and all kinds of individual names that he sees as running. There's a lot of opportunities in these markets, and quite frankly, a lot of things are still doing quite well out there. So, TG, broadly from a market perspective, the S&P over 6,000. Small caps, those are doing better. Overall, these markets, as much as people are saying we're due for another correction, look at how volatile, look at how fast everything's happened. There's still some underlying strength, it seems like, at least in the broad averages. So, what are you seeing in your charts?
Yeah, exactly. And, over 6,000, that's great because 6,000 was a bit of a barrier. And then it looked like we got a bit of a liquidation break because of the whole Trump and Elon debacle last week. The market went down on that. And then maybe the market's like, okay, they're just having a little tiff or whatever. And then the market took that as an opportunity to buy the dip, shake out some weak hands, and then short squeeze the rest of them. And really, everybody hates a rally. It's like the most hated rally right now because it just keeps grinding up. It won't pull back. Everyone's like, oh my gosh, there should be a pullback. And it just keeps going up. And it's that kind of attitude and that kind of sentiment that actually keeps markets up. And to be honest, this week, I'm kind of on that boat too. I was put a weekend video. If you guys go to YouTube and look up my channel on Profit Pilot, I'm saying, hey, caution out there because I'm seeing the SPX kind of looks to me like we should get a little bit of a pullback. Nothing crazy, just a little something to help refresh some things. And I'm looking at some of the leaders, I'm looking at the FANG stocks and I'm looking at Nvidia and Avgo. And I'm just seeing a lot of the leaders look like they're getting frothy to where we should be starting to see a little bit of a pullback to help digest some of this and then start over again, but that's not happening. And I have to kind of think, okay, so am I wrong about this? Or is there a rotation? And I'm starting to kind of warm up to the idea that I do think the market's strong. I've said that all along, but I was looking for maybe, I don't know, like a 3 or 4 day pullback to kind of refresh some stuff. And we're just kind of not getting that. We just kind of get these dips that keep getting bought back up, and it's putting enough doubt in the market that actually keeps things propped up. And the whole rotation idea might be that some of these leaders and the leading names, yes, they're up, they're too frothy, they're not, the risk to reward isn't that great. And so what maybe is happening are the big money maybe is rotating some of their winnings out of those stocks and out of those areas, and they're rotating back into the other stocks of those groups that haven't really moved up over the last few weeks because generally the market looks good, it's strong, it's not going to go down. And so, well, money's got to go someplace, and it has to go from a something that doesn't have a good risk to reward ratio because it's already moved up too much to something that's hasn't really broken out yet but isn't breaking down and has more room to the upside. And that's kind of what I'm thinking might be setting up right now.
Well, TG, let's dig into that idea a little bit further. You were giving us a few examples off mic of some of the stalwarts kind of getting a little frothy, as you say, but then within those same sectors, seeing some of the same companies in that sector start to get a bid. So maybe that rotation out of the bigger name and into some of the lesser followed names. Maybe give us a couple examples you see.
Sure. So for example, Nvidia, a huge name, everyone knows about it, but it's basically back at its previous all-time high at 142 and change, and it doesn't look like it's really going up that much. And then we can even look at SMH, and it looked to me like it was kind of stalling out, but it keeps going up. And I'm looking at AMD, which was another one of the leaders, and it also has kind of not been doing much. So I'm thinking, okay, what? Oh, and then you even have Avgo, Broadcom, which was a huge mover. And I think that it had a run up into earnings, and because they had good earnings, they actually dropped it because they got what they wanted. So it's down. And I'm thinking, okay, these names are not going up. Why is the index still going up? Well, then you start looking around and you realize that Micron, MU, is still going up, having a good time. ARM is coming up, having a pretty good day today. I'm trying to think, my subscribers actually told me a few other areas and tickers that in the sector that were actually doing pretty well. And you look at Qualcomm, I think was another one. Yeah, like Qualcomm's having a good day today. And so you're thinking, huh, like what's going on? Okay, the sector is up, the ETF is up, but the big leaders are not. So it's this money that's rotating out of the leaders, coming into these other ones and starting to keep the whole situation propped up. And that's why I feel that maybe the SPX could be doing the same thing. Because if you look, the SPX isn't really doing much today, but the IWM is having a field day. Back the last 2 or 3 days, the IWM has been outperforming. And maybe that's what we're starting to see is risk on into the small caps while the big caps like the SPX start to take a little bit of a breather.
Another stock that I've heard noted is Broadcom. That one has done very well just in the last month and a half, too. So there is this rotation going on, TG, but with the names that you're seeing that are working, how do you take this rotation? Is this a defensive market? Is this a risk on market? Or is this simply, again, just a selective market where, quite frankly, you need to be in the winners? If you can isolate those, then you're going to do just fine while everything else lags?
Yeah, I would probably go with that third choice. I don't think it's a defensive market. I have been saying ever since Trump said pause that this market is very strong. We've just been killing it in the Moxie room, made 2000% on SOXL on a trade. This market's been doing great. And I still have a bunch, like we just reviewed all of our positions in the Moxie room. I still have a bunch of long positions and they're starting to move up again. But I was getting confused last week and still kind of looking into that about in this week, being like, it looks to me like things should pull back, but they're not. And then I'm actually seeing that these smaller names are starting to come up. And so that's where I have to kind of think about this. So not defensive. I think it's a stock picker's market. So you do have to pick the ones that are working. And, if it's just not working, either you got to figure out, well, do you just have to let it incubate or are you actually just kind of in something that's not working? And I think the names that have really moved up quite a bit, like Avgo and Nvidia, for example, they need to take breathers. But the leaders are not necessarily indicating that the whole market's going to come down. So let's keep rotating into something else that is working. For example, like look at TEM. TEM's having a great day today. Now we're fully loaded in this thing. We actually started buying back into it around 60 to $61, and now it's at 66. So, you look at a name like this looks like a fresh entry and looks like it is just starting on a good new trend. Right as the market, it looks like it's starting to get tired. So what is that telling me? Well, I think I'm starting to lean towards the idea of rotation.
Well, TG, another factor that plays into this theme is that when you look at some of the broader indexes, the S&P 500 or the Nasdaq, they are starting to slow their roll a little bit. But the IWM, the Russell 2000, is starting to play catch up. So is the action now in a catch up trade in the small caps?
I guess that's kind of what I'm having to say. I think that maybe the SPX could start slowing its roll and just grinding higher, looking like it should roll over, but doesn't. And so, yeah, if the market's going to stay up, and then people are like, well, heck, I need to get in. And they start chasing things and starting to say, I don't want to miss out on this. And they have to keep looking for opportunity. And then they realize that risk is on. Yeah, IWM, small caps.
Let's also go over to the precious metals. I want to get your technical analysis on anything that's standing out to you. I'll throw it over to you broadly. Gold is at 33.50, right in around that range. Gold has been kind of flat and boring recently. Silver has really taken off, but the gold stocks, GDX, GDXJ, those have continued to do really well. Silver stocks, SIL, those have done extremely well just in the short term. What catches your eyes in terms of trading opportunities in the precious metal space?
Yeah, and again, the precious metals are not too much things that I spend too much time on. The last time we spoke, gold was moving down, pulling back. I said, hey, let's talk again, see if gold can pull back to its weekly 21. Well, so far, gold is still holding its weekly 8, which is pretty incredible. And it doesn't look like it's still quite ready to really break out and run. So it might still need to digest a little bit. It might need to find a little bit more support if it's going to stay at the weekly 8. If that's really where it wants to go, then give it some more time. But it's hard to say. This thing's still looking pretty good. And especially with GDX starting to move up, maybe GDX is actually getting a combination of, yes, gold is up, but also stocks are up. And so GDX is going to be benefiting from that situation and from a stock perspective. Because remember, GDX gold miners, while they are related to gold, they are still stocks, they are still companies, and they still need the overall market to be doing well. And so GDX could be in the middle between precious metals and equities. And then, yeah, you look at silver. Holy cow, silver finally is getting its time to where it finally broke out past, SLV breaking out past 31. Gosh, what's not to like about it? I always know everyone kind of poo-poos on silver and they always just say it's the wheel maker and don't trade it and all this kind of stuff. But it's hard to deny clearly at this point where it is breaking past 31 and this looks like a pretty solid trade. I don't trade these things, so if you guys enjoy it, great. And maybe silver is finally kind of doing a catch-up trade. And then maybe, and again, I'm not too much of an expert about this, but I've kind of heard that silver can also be a little bit of an industrial metal, and maybe it's a combination of silver playing catch up to gold, but also maybe this is a sign that our economy is doing well and maybe there's going to be economic expansion. And so silver could be an example of where this we could be seeing some strength in the economy. I know copper is also a way to be looking at that, and copper isn't looking too bad either. In fact, you look at COPX, there's been a big turnaround. What is it? What's the other company ticker? I'm trying to think that has copper, because I'm even looking at the slash HG futures. Copper futures kind of look interesting. And if I can think of any other copper tickers, I think that they're looking okay. Yeah, I think they're all looking like they're wanting to start moving, and that could be kind of more of an economic sign.
Yeah, I think it's a good point you bring up because I think there's definitely a catch-up trade in silver with gold's run and it's finally digesting it, and we're seeing that in the silver equities and gold equities running in tandem. But there is a big move up in copper and silver for an industrial standpoint over the last couple of weeks, so maybe a brighter outlook on the economic future. Another sector that's been ticking up is the nuclear sector and uranium sector. I know you follow the nuclear stocks. Want to get you to weigh in on where we're at with something like NuScale Power or Oklo, where they both had big runs over the last couple of months, but maybe stalling out here or maybe getting ready for the next blast higher. How are you looking at those small modular reactor stocks, TG?
Yeah, well, let me go real quick back to the other copper thing I was talking about was FCX. And if you look, that thing bottomed when the market bottomed, the whole Trump pause thing early April, and it has been on a tear since. And I think that maybe the idea is if Trump helps stimulate the economy and bring stuff back into America and manufacturing and expansion and all the things that they're trying to do, these might be economic signs that we're starting to see through some of these commodities and commodity related stocks. So then if we look at the nuclear stuff, you guys know I am 100% thumbs up on everything nuclear and small modular reactor. There have been all sorts of news about Oklo and SMR and all this stuff. I think the last one they jumped up on was May 22nd when Trump said he was going to do a wartime emergency thing on nuclear energy. So yeah, they're crazy. They're doing great. Now they're kind of at their previous highs. They jumped a little bit too far, so the stock themselves do need to digest, but I mean, you can't be anything else but bullish. We know that we need more power for AI, for everything else we're going to do, for electric cars. I mean, you name it, if we're going to try to electrify our world. My understanding, and correct me if I'm wrong, anybody out there, but I think I heard that America makes 1 terawatt of power. The Chinese make 4 terawatts of power. And the Chinese are bringing on 1 terawatt of power every 18 months. And so I think they're trying to get up from 4 to 8 or 12 or something like that. And we in America are just trying to get from 1 to 2. We're trying to double. And how are we going to do that? Well, we're probably not going to do it with just solar. We're not going to do it with wind. We're trying to get away from natural gas and coal, but we're still probably going to do that. And so right now, nuclear, until we can get fusion or fission or any of those other things that we're trying to do, I think the best thing we have are these small modular reactors. And so I think until that bubble pops, which who knows if it ever is, or when it is, I think we really need to keep trading anything related to the small modular reactor idea. Of course, pick your spots. You don't want to buy at the high or something, buy dips, but I think that trade is going to be a good one.
Yeah, that narrative around it, it sure is friendly right now. And that's still with a timeline for some of these to get built being a few years out. But the more approvals and the more money that's put into that sector definitely helps and can speed up some of that process. But again, it just needs more capital and more of these to get built, I believe. TG, thanks for going around the horn with us. A lot of positive news out there, a lot of positive charts out there. So we'll follow up with you in about 3 weeks' time. And yeah, everyone click those links in the show notes, especially to visit TG's Profit Pilot website and follow along with what he's trading and all the live chats that he does with his subscribers. So TG, great chatting with you. Have a great rest of your week.
All right, thanks, guys.